Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek with Kooima Kooima Varilek. Well, just about everything is in the red this morning with the exception of nearby live cattle. And Scott, let's start off with cattle. First, we had record cash trade last week versus a bearish cattle on feed report. So let's talk how the market has handled that this morning.
Yes, thanks for having me. And it's been the cash is king kind of market. I mean, that's what's got us to some of these levels, and it's proven. Yep, feeder calf prices, live cattle prices hanging on very strong, saying how tight we are and how current we are. I mean, getting that big run in cash, you get the 198 trade in the north, 190 in the south. That's super impressive. I mean, and everybody's taking it. And the fact that even after the cattle on feed report, some of that trade was still happening. So loving what I'm seeing there. And now we're going to have to wrestle with some of the cattle on feed report and try to decide what that's going to do. But the numbers just aren't there for the middle of or end of June for those kind of trades to happen is very impressive because we're after the peak demand numbers. Usually we're starting to tail off. Show lists are starting to grow. But we have a lot of interest in trying to sell early. So guys are even selling some of these calves that are not ready yet. I'm anticipating that these weights are going to drop off. And no matter how many cattle we pull ahead or try to sell, they're chewing right through them. You're able to find a home for them very easy.
Certainly an indication of just how tight it is out in the country, Scott. And so where did these extra placements come from, that 104% placement number on that cattle on feed report?
Trying to wrap my head around it a little bit myself, and it's a struggle. Last fall was the first very high placement numbers we saw, bearish reports, and that really corrected the record high at that time market from the all-time highs, and we were worried. I mean, that those placements were just going to shatter this market. It's over. The rally's over. And then here we are. This is now. Those placements that were all in those reports last fall should have happened now. And we're seeing record cash. We're up to 198. So it's a little bit, frustrating, head scratching okay, so we were supposed to be so bearish and now here we are. They're not here. Those numbers are not here. So if we look at it again and say, where would all these extra placements come from? The only thing I can come up with is we do have, quite a large sector of the market. We're bullish, and we know how tight these numbers are. We know how long it takes to rebuild a cow herd, and that's not going to happen overnight. So there's that anticipation of this is the best market we've ever had in the history of the cattle market, highest prices. I want to be a part of it. So there are these empty yards. When you're looking at an empty yard, you want some cattle in it because they're getting very high, and you're getting some calls from different custom yards saying, "Hey, I got room for cattle. I would like some cattle." So there's a little bit of that scramble effect, possibly, that say I need to get some in. If we're going to be partying, I want to be there. So that would be my only thought. Maybe some of that's happening because usually, you can get to this summer time frame, and you're more apt to just kind of sit empty for a little bit, wait for some of these fall runs, some of these yearlings to come off of grass. But maybe it's that little bit of anxiety kicking in because we know how tight the numbers are and you want to be a part of it.
No doubt. And the gains, the performance has been so good. So that may be playing into it. What's your thought about, heifer retention? We kept saying, these placements numbers, we were pulling heifers into the feedlot. Do you still feel like that's happening?
I personally think we're starting to shift a little bit, and there's some reasons. It's been a struggle. It's been hard to get that started because you've got high interest rates, you've got input costs that are so much higher, labor shortages, all those things that you hear from other sectors of the industry. Producers are fighting the same thing, and that's what they've proven. There's just not enough profitability in that sector, in the cow-calf sector, to want to rebuild. We're just waiting to get, slammed again, waiting for this market just to dive and correct. And I think finally we're getting to a point to where we've sold hard enough on these females, and we've got a lot of cheap feed out there. We're getting a lot of rain in cow-calf country. So, and now we're getting to a level to where it's time. And I think we're starting to see these heifers go back to some of the cow herds. I think it's a little bit evident on some of the video sales. And so I think we're just getting started. So as we look ahead, that means tighter numbers yet in the feed yard. So the tightest numbers are yet to come, and it's going to take a while to grow that heifer up and get her bred and to have a calf and wean off a calf. So you're still a couple years away from seeing another calf come to the market because we saw some heifer retention. So we're starting to see that. We do have to remember this is a little bit of this is a futures market, so it is going to look ahead. I remember 2015. Yes, that was the year we broke so hard, and a lot of my friends, some of them went broke. So I mean, it was a struggle of a financial year. So it's going to start to move that ahead in our brains, starting to say, okay, maybe I'm going to have to think about if I'm going to invest this large dollar amount. Maybe having some sort of plan rather than just rock solid. Yep, tighter numbers the next 2 years. Yep, I understand, but we do have a lot of risk hanging out there.
Yeah. It's been discouraging if you look at the board, trading at such a discount to the cash. And then really, we had a lower weekly close last week in all but the June contract, last week in the live cattle futures. It's been discouraging to see the lack of response in the futures market. Is it still, I mean, we see more bird flu cases coming in Iowa. Is that still what you think is holding the market back?
It could be part of it. I feel like we've moved a little bit past the bird flu. I think they tried. I mean, it tried to stick to the market, and it just kept falling off. And we've made it a couple weeks now without having to really worry about that. but you look at the other side. I think it's just a lack of participation from the funds. The funds are not wanting to get into this market. This open interest is staying very small. So you're exactly right on that point. We're not seeing the follow through. We've had these high cash prices, but we can't get that interest, that fund push behind us. You get a market that wants to go to record highs on some really good news. You have the funds there participating really into that market, and we just don't have that in the cattle market. And it's been a little weird that that's not happening. So maybe it's bird flu, whatever reason it is why the funds are not in. But you would think that this record high cash and tighter numbers with what we're seeing would really have some fund participation, but we haven't seen it yet. The long speculator is not here.
Yeah, that's curious to me why they haven't come back or piled back in here. Okay, the hog market. The funds have exited most of their long position there. Cash trade seems to continue to fall here. Is that the main problem for the hog market? Why we can't get that market to recover?
I couldn't tell you what the main problem is, to be honest with you, but yeah, that is definitely one of the highlights. I think it was just a large sector of traders thinking that this market's going to turn around and be better. And the fundamentals were pointing towards, we're going to bottom this market, we're going to turn it around. There was a reason we had shot some of these futures prices up as high as 110. I mean, there was some optimism there after all those sow liquidation that we saw, expected tighter numbers. Some of the isolenes were starting to really get stronger in prices and harder to find. You're hearing about China hog prices moving higher. So there was a lot of that optimism there. And now it's just dragging. It still has not found a bottom yet, cannot find footing. And now you've got a market that's trading a little bit scared. It did not hold where it was supposed to hold. It's starting to, get some people up against a wall. So I think guys are trading a little bit more nervous now than they were, and realizing, okay, I might have bought some of these replacements just a little too high. So quite a bit of risk. I would have thought it had held by now. Now we're heading back down, taking out some of these old lows, and it's going to be tough to put a measurement on it, but that severe downtrend on the chart just remains, and it's not going to change until we start breaking some trend lines and get some technical shifts into the market yet.
Yeah, and not a good setup here as we go into the quarterly hogs and pigs report on Thursday either, for sure. Okay, the grain market, we have had this severe break here. We had lower weekly closes and everything last week, and the market doesn't seem to think that there's a weather problem out there. So are we going to keep going down, or do we get some end of month, end of quarter type short covering this week?
you could see a little short covering short term, but I just, for me, it's a market that's overall looking at the moisture that we have across the Corn Belt, that there is rain available. We are now in the end of June, and no signs of it being too dry in a large area. Yes, you can always find pockets that it's too dry here, and it's always tough to gauge because you have to really broaden what you're looking at for an area. And so I think it's in a little bit of trouble here. The one thing that we need, I keep hearing about the abnormal heat that's coming. The one thing this crop needs right here in a big area is going to be some heat, so it's going to be welcomed that we get some heat. The rows are covered and we've got some ground moisture that's abundant in a large area. So I think it's more pressure. We're going to have to start looking at these corn prices and look to that, that flush that we had. I think it was the March contract got into the low 390s. So for me, that's now our kind of support line that the market could be eyeballing as it starts to slip. So yep, I guess call me a bear, but I think there's risk down to there. And the soybeans, same thing. I think we've got an abundance of a crop coming. We'll probably arm wrestle quite a bit over this acreage report to try to see what that looks like. But I think that's going to still mean soybeans are going to be in a little bit of trouble, and that's why they've traded as weak as they have, in my opinion.
All right. Yeah, we'll see what we get out of the report here coming in Friday. All right. Thanks so much, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.